It's FOMC day. Is the Fed going to pause or hike rates? Here's what you need to know before the bell. So, of course, today is the much anticipated announcement by the Federal Reserve. The question, of course, is will they, won't they hike rates? Will they pause? And what does that mean for the markets? Of course, lots of debate about this going on within the markets. Of course, over the last several weeks, the market has been on an absolute tear higher. And as we've discussed before, the breadth of this rally has been fairly narrow, and we've been expecting a bit of a rotation to other areas of the market to start to participate with this rally as well. We are starting to see some of that happen. We're seeing that breadth starting to broaden out here a bit. But the question today, of course, if the Fed hikes rates or not. Most likely the Fed is going to pause here at least. The inflation data yesterday suggested inflation at the headline is coming down fairly sharply, but core inflation still remains fairly sticky. So what this suggests is the Fed may pause here, but there's still the potential for another rate hike down the road if core inflation doesn't start to come down here over the next few months. Now, this is going to start to push out all these ideas of Fed rate cuts into at least 2024. There's still the risk of a further economic slowdown as well. But again, if we go back and let's take a look at the market here, the S&P 500 now trading well within this 3 standard deviation territory. In fact, at the upper range of that, and is starting to get fairly overbought here in terms of its MACD as well as its money flow signals below. These aren't on sell signals yet, suggesting there's still a positive push to the markets. But again, these more extreme deviations from moving averages will eventually correct. In fact, we talked about this last week, is that even going back to the previous bull market period and looking back over the last 3 years, these more extreme deviations have corrected on a regular basis. We see the same thing if we look at other markets as well. The NASDAQ also pushing up into the 3 standard deviation territory, much more extended above the 200-day moving average. Now a 20% deviation from that 200-day moving average. That is a very big gap that ultimately will fill. But again, as we talked about, we're now starting to see other areas of the markets catching up a bit here with large cap stocks. That breadth of the market starting to broaden out here a bit. That's actually a kind of a bullish sign, suggests that markets are still positively biased here. But the Russell 2000 index now 3 standard deviations overbought as well. Take a look at the small cap 600 index. This is the S&P 600 small cap index, 3 standard deviations overbought as well. The mid cap 400 index, breaking that, also 3 standard deviations. So every area of the market now has moved into that more overbought territory. Now, doesn't mean you're going to get an immediate correction in the markets. Doesn't say that at all. But it does suggest that upside is going to become a little bit more challenging until either the market consolidates here a bit or begins to have a bit of a correction back towards that 50-day moving average at least. So again, if you're looking to increase exposure into the markets, definitely look here for a pullback to do that. One thing in particular, as we talked about, the bear market is now behind us. So that correction last year is over. We came down, we set a bottom. We're now back above the 200-day moving average. We have the golden cross of the 50 above the 200-day. Every signal suggests right now that we're back into bullish mode within the markets, but that doesn't mean you won't have 5 to 10% corrections along the way to put some capital to work. So be patient here. Look for more rotations. There's still a lot of really undervalued companies sitting out there that may get some of the money flows during a corrective cycle in the market, even a consolidation. So look for some of those opportunities. And of course, you go to our website right now, realinvestmentadvice.com. Our latest article from Michael Leibowitz is out talking about sector rotations. And you can also view our sector rotation data and analysis at simplevisor.com. I'm your host, Lance Roberts, and that's what you need to know before the bell.